Welcome to Business Middle East, the last episode of this season. Several surprise events rocked global markets in 2015. Floundering currency markets, stimulus packages in Europe, Black Monday in China, an interest rate hike by the US Federal Reserve, and of course we shouldn't forget the oil price, which is diving into the unknown. This edition is dedicated to summarising these events and discussing the 2016 forecast for the global and MENA markets. Joining us is Nour Eldeen Al-Hammoury, Chief Market Strategist at ADS Securities in Abu Dhabi. Nour, you've been with us throughout the year to analyse many significant events. In short, how would you describe this year for markets?
Well, Darlene, in short, it's been a year of uncertainty with many negative surprises for the global economy and the global markets.
That's right, Nour. There was a kind of consensus among economic analysts. Let's start with the United States. We had the historic event by the Federal Reserve of raising interest rates. However, the long debate over interest rates led to volatility in emerging markets and the global equities. We saw a rise in the dollar of around 11%. The US inflation remains below target. After the interest rate hike, what awaits the US economy? What's the next step for the Fed?
If the US dollar were to keep on rising during 2016, we believe that the US economy might come under pressure, especially in growth and inflation again, which may lead to the Federal Reserve waiting a considerable time before taking any new measures to tighten its policy, unless things went the other way around. Then the Fed may need to reconsider its December decision. Our estimates towards the Federal Reserve policy has been right throughout the year in terms of the right timing to raise rates. Now, and after raising the Fed fund rate, the Fed will be on alert and cautious toward all the developments and economic releases, which will be the key for the Federal Reserve's next decisions.
It seems the status of caution should not just be in the US, but in Europe as well, in order to follow up the results of the quantitative easing programme adopted by the European Central Bank in March. Actually, this year was a hard year for Bank President Mario Draghi, who tried to defend the bank policy, hoping the stimulus packages would revive the Eurozone economy. Since the beginning of the year, the euro lost about 13%. Some positive signs have emerged lately through the rate of inflation and gross domestic product, as well as improvement in the labour market. Could the quantitative easing programme bear fruit in the Eurozone? How do you see the European economy next year?
The European Central Bank policy was right. The bank took the right decisions at the right time. The recovery signals started to show up clearly after more than 8 months of launching the quantitative easing programme. The declining euro exchange rate, together with a stimulus package from the ECB, might be enough to grant further stabilisation and recovery in 2016. We believe that we will see further improvement, but the problem might be if the global economy keeps on slowing down. If so, this might be another negative factor for the European markets, at least during the first quarter of 2016. It's worth mentioning here that the Bank of England may raise its interest rates in 2016 after the Fed hike, which may also be a factor putting the UK and the European equities under some pressure.
Well, since you mentioned the pressure on equities, let's talk about the Asian equities. China's stocks had a big shock on Black Monday. An unprecedented sale weighed on Asian markets and the global ones. In spite of China's stimulus measures, the economy has been slowing down, but the Chinese yuan has successfully entered the reserve currency basket. However, Japan has failed to get rid of its economic recession. Nour, what could 2016 carry for the Asian equities and the currencies?
Despite all the talks about the Chinese slowing down throughout the year, which we believe is a normal and healthy slowing down, the Chinese yuan entered the reserve currencies basket with a notable weight of more than 11%. This is enough to show how solid the Chinese economy is. We believe that its strength will continue to improve in the coming year. Moreover, the Chinese market in the long term could offer good levels for buyers and investors, especially after the Chinese yuan is confirmed as a reserve currency. Over the next 5 years, there is more than $1 trillion expected to enter the Chinese market. In the meantime, there are many thoughts about Japan. Despite the negative figures in Q3 of this year, the numbers in Q4 have been encouraging. As for next year, we are favouring the Japanese yen, and we believe that the yen will have a great potential in 2016 against a basket of currencies.
OK, we'll stay in Asia, but let's move to the Middle East. 2015 recorded more geopolitical tensions, but the most significant event for the region's markets was the sharp decline of oil prices, lack of action from OPEC, and the oversupply of oil flooding the market. But also this year, Iran signed a historic nuclear deal that ends the era of economic sanctions. And as for the MENA stock markets this year, they've been nominated for the worst performance since 2009. What's the forecast for oil prices and